The dual band trading system. It is composed of dual bands which are independent, cooperating, auto-adjustable in volatility, time and chart periodicity. One of the bands is of shorter and one of longer time span. The dual band system enhances the direct comparison of the shorter and longer price trends, giving the trader freedom to analyze and trade one trend, or two, or multiple trends simultaneously. The interaction between the price and the bands of the dual band trading system results in specific chart pattern combinations that can help to identify trends and make calculated forecasts of future price movements. The dual band expert automatically identifies these chart patterns and notifies the user for their meaning. We will see more about the dual band expert later. Let's talk about the dual band trading system's chart patterns. They are called the 1-2-3 and 3-2-1 patterns, and there are 8 in total. We can see the full list of the 1-2-3 and 3-2-1 patterns and their interpretation on this table. They can be very bullish, bullish, bullish neutral, neutral, very bearish, bearish and bearish neutral. Out of the 8 patterns, 4 are especially important. The first one is the 1-2-3 pattern, which is bullish. For this to be formed, the securities price, which is represented by the number 1, must be above the shorter in length band, represented by the number 2, and that 1 must be above the longer in length band, represented by the number 3. Now this is a bullish pattern since today's price is higher than the short to medium term band, which is an indication of short to medium term strength, and that band is higher than the medium to long term band, which, in turn, is an indication of medium to long term strength. Thus, the security that forms a 1-2-3 pattern is a security with strong short, medium and long term momentum. The exact opposite pattern is the 3-2-1, which is a bearish one. For that to be formed, the securities price, 1, must be below the shorter in length band, 2, and that 1 must be below the longer in length band, 3. The 1-2-3 pattern is even more bullish when the securities price and both bands are in an upward slope. When this is the case, it is called the 1-2-3 up pattern. In the exact opposite way, when a 3-2-1 pattern is formed and the securities price and both bands are in a downward slope, we call it a 3-2-1 down pattern. Now let's see some examples of the rest of the patterns. The next one is the 2-1-3 pattern, which is neutral. Remember, the securities price is represented by the number 1, the shorter band by the number 2, and the longer band by the number 3. Now, this pattern is neutral because it is consisted by one bullish and one bearish element, with the bullish one being that the short band is above the longer one, and the bearish that price is below the short band. The next pattern is the 3-1-2, which is bearish neutral. That is because it is consisted of 2 bearish elements and 1 bullish one. The bearish elements are that both price and the shorter band are below the longer one, which points to medium to long-term negative momentum, and the bullish element is that the price is above the shorter band, which shows short-term positive momentum. The next pattern is the 1-3-2, which is bullish neutral. The next, and final pattern, is the 2-3-1, which is neutral. To start using the dual band trading system, the user can apply the dual band trading system's template to any chart. The template's main window includes the short-term band, the long-term band, the automatically drawn support lines, like this one and that one, the automatically drawn resistance lines, like this small one here, and this past resistance line that turned to a support one after being breached by the price. It also includes the nearer support and resistance lines, which are automatically detected and drawn, and can be used for both target and stop-loss purposes. Finally, the main window of the dual band trading system's template includes the extreme demand, or price inflation alert symbols, and the extreme supply or price deflation alert symbols. The upper window of the template plots the maximum profit-loss calculator. You can learn more about the calculator by visiting the maximum profit-loss calculator lesson. The dual band trading system's expert automatically identifies and interprets the 1, 2, 3 and 3, 2, 1 patterns. The dual band trading system's exploration scans securities looking for those forming the 1, 2, 3 and 3, 2, 1 chart patterns. This exploration works with data of any periodicity. So do the 1, 2, 3 and 3, 2, 1 chart patterns. The zoom in, zoom out trading technique. Now that we have learned the basics of the dual band system, let's have a look at the zoom in, zoom out trading technique, and use in our examples the 1, 2, 3, 3, 2, 1 chart patterns. Some traders like to zoom into a chart and look for immediate profits by making decisions without previous planning, while others like to zoom out so they can place price movements in context and exploit larger trends. The best traders can zoom in to examine smaller trends, take advantage of emerging opportunities and respond to developing risks, and zoom out to evaluate the importance and validity of a trend, to spot the general direction and benefit best from both small and big trends. The best investors don't divide their trades into situational or strategic, and emotional or contextual, neither do they choose between short-term or long-term trading, but they embrace the concept that all trends are interconnected, and that it's better to trade across a continuum of trends, by zooming in and out when needed. Let's look at an example. On this chart of Standard & Poor's ETF, called SPY, the 1, 2, 3 pattern has been formed. Also, both the securities price and the shorter band have flattened, and a resistance from the recent top is tested, at levels where an extreme demand or potential price inflation alert was signaled. So what strategy shall we follow? Is this an established upward long-term trend, or a new trend in the making? And, has the uptrend run its course, or there is more life in it? By zooming out to the weekly chart we see that an even stronger bullish pattern has been formed, the 1, 2, 3 up pattern. This is an indication that the bullish trend is very well established. By zooming out to a monthly chart, we spot two very bullish, 1, 2, 3 up patterns. The first was formed between 2012 and 2015, and the second is formed from the late 2016 to now. We also see that an extreme demand alert is given for the first time in years. So this is a very strong and mature bull cycle, where prices might not be cheap anymore, but where there is no sign of an immediate reversal. Now, if we zoom back into the daily chart, it's easier to assume that the current flattening of the securities price and of the shorter band do not imply a long-term demand shortage, neither a long-term trend weakening, but they rather indicate a normal digestive phase of the recent strong profits. Still, since the bull market is very mature and there has been some short-term momentum loss, our best bet should be to follow a bullish, medium-term strategy. The high-low trading system is composed of a band derived from the highs and lows of an asset's price, of the price position indicator, and the median. The high-low trading system is composed of a band derived from the highs and lows of an asset's price, of the price position indicator, and the medium, short and very short-term performance lines. The interaction between them and between the asset's price produces the system's main and secondary up and down signals. The high-low expert automatically identifies these signals and notifies the user for their meaning. We will see more about the high-low expert later. Let's note that the price position indicator shows where the current closing price of an asset is positioned in relation to its price range over a period of time. Thus, a value of 100% for a 50-period time range indicates that the asset's current price is positioned at the highest point of the security's 50-period price range. The high-low trading system's template includes 1. A band derived from the highs and lows of an asset's price, 2. The price position indicator, 3. The medium, short, and very short-term performance lines, 4. The maximum profit and loss calculator, 5. The automated support and resistance lines and trend lines, and 6. The extreme demand supply or inflated-deflated price alerts. Decision-making is enhanced by the interaction between all indicators and tools used. Let's talk about the high-low trading system's signals. We can see the full list of them on this table. They are divided into main and secondary, and into up, down, and neutral ones. A main up signal is produced when the price position indicator crosses above 20, and the price crosses above the higher line of the high-low band. This is an indication of an early uptrend. A main down signal is produced when the price position indicator crosses below 80 and the asset's price crosses below the lower line of the high-low band. This is an indication that a mature uptrend is ending and a new downtrend is beginning. The second main up signal is produced when the price position indicator crosses above 50 and the asset's price crosses above the higher line of the high-low band. This is an indication of an uptrend expanding. The second main down signal is produced when the price position indicator crosses below 50 and the asset's price crosses below the lower line of the high-low band. This is an indication of a downtrend expanding. A neutral signal is produced when the price position indicator is below 20 and the asset's price crosses above the higher line of the high-low band. A neutral signal is also produced when the price position indicator is above 80 and the asset's price crosses below the lower line of the high-low band. A secondary up signal is produced when the price position indicator crosses above 20 and the asset's price do not cross above the higher line of the high-low band. A secondary up signal is also produced when the price position indicator is above 80 and the asset's price crosses above the lower line of the high-low band. Another secondary up signal is produced when any of the performance lines is above 0 and the asset's price cross above the lower line of the high-low band. All signals are shown on this table and are produced by the interaction between the asset's price, the price position indicator, and the medium, short and very short-term performance lines. To start using the high-low trading system, the user can apply the high-low trading system's template to any chart. The high-low trading system expert automatically identifies and interprets all of the system's patterns. The high-low trading system's exploration scans securities looking for those forming the system's patterns,